Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to quickly update you on recent changes in my stocks portfolio and will discuss my schedule for covering the upcoming earnings report of some Canadian companies in the next few weeks. The dollar figure of my own portfolio at the moment is close to $87,000, almost $85,000 in Wealthsimple, and $2,500 in National Bank brokerage account. And our combined grand portfolio of me and my wife worth a little bit over $107,000 today. We have a lot to cover in this video, so let's jump right into this. I first just want to start with the overall portfolio allocation. This is a nice graphical representation of the stocks we hold in our combined portfolio of me and my wife. This is an overall a concentrated portfolio with 13 different stocks. The top stocks in this portfolio are EQ Bank at 14% weighting, Meta with 13% weighting, Aritzia with 12% weighting, Brookfield Corporation with 12% weighting, TD Bank with 11%, Google with 11%, Granite REIT with 8%, MasterCard with 7%, Amazon with 5%, and finally Kilam Apartment REIT with 4% weighting. These 10 stocks together form almost 96% of the value of our portfolio at the moment, which shows how much I believe in these companies and how much we are concentrated in these positions. After these 10 large positions, we have 3 stocks with total weighting of almost 4%, which are Louis Vuitton, Allocation and PayPal. Of course, the plan is to build a larger stake in these 3 stocks that we own, so we have a much more balanced portfolio at the end. In terms of the sector allocation, financials and tech are still our largest holdings, followed by consumer discretionary stocks. In terms of the individual account performance, let's look at my personal RRSP account first, which performed very well this year, and it is up almost 34% overall. This account consists of only US stocks. I had no new trades in this account, but the big news in this portfolio was Google earnings report, which was released yesterday after the closing bell. And the report was fantastic. Google reported extremely strong growth numbers across various segments of their business. Google Search and YouTube revenue were up almost 5% year over year. Google Services, which is a high margin business for Google, is up almost 7% year over year. And the most important growth driver of Google, Google Cloud. The revenue of Google Cloud is up close to 30% year over year, which is great news for investors. They also reported better margins and record high operating cash flow and free cash flow for the quarter, which is again great. The only negative thing in this report was the number of their employees, which is still rising, and I hope Google management team can focus on efficiency and cutting costs, so hopefully we can see better margins and we can see Google to be able to continue to improve the margins in the coming quarters. As a result of these strong earnings, Google share price jumped almost 6% today. So now let's go back to my Wealthsimple account. Here I have 25 shares of Amazon, which is up 27% so far, and 70 shares of Google, which is up 26% so far. My plan for Google and Amazon is to just hold these stocks at the moment. I don't want to buy more or sell these stocks at these levels, as I believe both companies are fairly valued at the moment. I also have 14 shares of MasterCard, and it is up only 6%, which I'm happy with my weighting in this company at the moment as well. MasterCard is also an amazing business, and I think right now it is fairly valued. I also have a small stake in PayPal, which is up almost 20%. It's a very small position, so I'm not sure what to do with the stock. I wanted to build a much larger stake in PayPal, but the share price jumped suddenly in a short period of time. I should either buy more shares of PayPal at these levels or sell my shares and invest the money in something else, as I don't like to hold a very small position like the current PayPal position. Next, let's look at my personal TFSA account, which consists of Canadian stocks. I'm up slightly 0.1% in this portfolio so far. This is not really good performance, but I believe Canadian stocks that I hold in this portfolio will outperform the market in the future, especially after we finally finish the recent credit cycle. I want to deploy more cash into this account and maximize my TFSA with Canadian stocks in the coming months, as I believe Canadian market has a much better valuation compared to US market at the moment. Here I had a few buys in the past month. I bought 3 more shares of Allocation and now I own 23 shares of this company, which is up almost 7%. I really like to add to this position, but unfortunately the stock barely goes down. I'm patiently waiting for a dip to deploy more cash into Alimentation Kushtar. Next, I have 320 shares of Aritzia. They had a disappointing earnings report and the stock went down almost 25% after the report. I bought 30 more shares of Aritzia to average down in the last month, and I'm currently down 35% on this position, which makes Aritzia the worst performing stock of mine. But I believe Aritzia can easily rebound and go to $40 range again if they report good numbers next quarter. I think this stock is way oversold and undervalued here. This is not a regular retailer with declining revenue and tons of debt on the balance sheet. This company has virtually no debt, and they are still growing revenue even in a not great macroeconomic condition. And if they can solve the inventory issue and manage their costs, I believe Aritzia can rebound quickly to $40 range. It's still a risky investment, but I believe stock can rebound quickly. I will deploy small amounts of cash each month to nibble on Aritzia shares at this point. Next, I have 265 shares of Brookfield Corporation. I added 5 shares to my position during the last month, and now I'm down only 4% on this position. Brookfield had a nice little rally in the last month, and the stock went from $40 per share to now $47 per share. Brookfield is another stock that I believe was way undervalued and oversold. Their business is of course sensitive to interest rate in the short term, but for a long-term investor like myself, this is just a great opportunity to buy this quality business at a discount. It's still undervalued here, and if I have extra cash, I like to buy more Brookfield Corporation. Next, I have 200 shares of EQ Bank, which I'm totally happy with my weighting, and I am up a whopping 31% on this position so far. I predicted last year when the stock was in the 50s that EQ Bank will reach a new 52 weeks high and potentially a new all-time high sometime in 2023 or 2024. And now the stock is at its 52 weeks high and is really close to make a new all-time high probably in the next couple of months. My only plan with EQ Bank is to just hold the stock and enjoy the growing dividend of this company. Next is Granite REIT. I own 100 shares of this REIT inside my TFSA. Granite is a real estate company with extremely strong fundamentals, even in a high interest rate environment, which is awful for REITs. Granite is still growing its AFFO per share while buying back the cheap shares of the company. They're also paying down the variable rate debt and reducing its dividend payout ratio quarter after quarter. And I believe once we are done with the interest rate hikes, Granite can start to raise this dividend again. I'm extremely happy with Granite REIT management team decisions to deleverage the balance sheet during this time, and I will hold all of my shares in this company at this point. Next is Killam Apartment REIT, another great well-run real estate company in Canada, which is basically flat at the moment. I bought 10 shares of Killam in the last month, and now I own 212 shares of this company. At this level, I will probably hold my shares in Killam and will wait for a pullback to add more shares. Finally, I have 138 shares of TD Bank, which is up almost 2%. My plan for TD at the moment is to just hold my shares and collect those dividends over time. I also bought one more share of LVMH or Louis Vuitton stock in my National Bank Direct brokerage account, and now I own 10 shares of that stock as well. A lot of Canadian stocks in my portfolio have their earnings report coming up in the next couple of weeks. I prepared this graphical table which shows the upcoming earnings report of some of the Canadian companies I want to cover. A few stocks that I will cover the earnings report are EQ Bank, which has an earnings report on August 1st, Enbridge, which has an earnings report on August 4th, Killam REIT, which has an earnings report on August 9, same with Granite REIT, it has its earnings report on August 9. I have Brookfield Corporation with earnings report on August 10th. I also have Northland Power at this date, and finally I have TD Bank and overview of Canadian banks' earnings reports on August 24th. Let me know which earnings report you are most excited for and if you want me to cover any specific earnings report outside these companies. There you are guys, I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar portfolio update videos. I will come back with some stock analysis videos and also earnings report of Canadian companies very soon, but until that time, I see you guys in the next video. Farewell.